Hey everyone, this is a trader investor. In today's video, I'm going to talk about SPY and the supply zone. What is price doing? As you know from all my trading, I use price action because price is king. Price is what tells us what is going on, and so we pull entries and exits based on the price action. So in today's video, we're going to focus really on SPY and why price is doing what it is doing and how we're taking advantage of these moves. And these lessons are always meant to show you how to look for structure moving forward. It's not, oh, I missed this yesterday or I missed this last month. Is what can I see, what can I learn from these setups so that I'm better prepared for the next time this happens, so that I can pull the trigger with confidence. No fear, no greed is my style, right? We pull the trigger when the chart tells us to enter. We pull the trigger when the charts tell us to exit. We pull the trigger when we're happy with the gains and we don't want to give back those gains. Just as a matter of quick example, if you had entered a long position, if the chart had told you to enter a long position here, and if you did not exit here and you waited, well, you waited through a lot of pain to recover, right? To recover. If you had options, maybe those options went to zero on you because you did not take advantage of these moves. Very, very critical that you do that in your trading. So no fear, no greed. The no fear part comes because you have the setup and you pull the trigger based on that setup. Nothing else. Very, very simplified process. This is how I like to look at all my tradings. Is simplify everything and pull the trigger based on what the charts are telling us. If we trust our system, then we have nothing to fear. If we trust our system and pull the trigger, the only enemy we have is self, right? Doubt, fear, greed, all of these. So we just need to eliminate that. So let's dive right into today's lesson. So SPYs in the last few weeks had a nice run up and then a pullback. Pullback for me is a beautiful thing because it's a buying opportunity. It's an opportunity to enter a position. Instead of chasing and entering up here in the 468 area where I don't know what price is going to do. Yes, it went up to 473, but then it collapsed. I'd much rather enter when it comes to the 460, 450 area. And you know, I was calling out to 454 areas where I want to enter. This is a beautiful area. So we have to look at a few things to understand. So if we draw our Fibonacci retracements high to low, from the lows to the highs of what we see on the chart, we can see that price pulled back to the 50% retracement. Not quite to the 61.8, a little bit past 50%, not quite to the 61.8. Once we have this in our charts, we're ready to go. Why? Because price comes to the 23.6% retracement. If it goes through, no action. Price goes to the 38.2. If it goes through, no action. If it bounces, this is where we have a potential trade. We have a potential trade, but we're careful because then we also draw trend lines. As price is making lower high, we have a new structure. We have a new structure because we are breaking these lows. We're breaking these lows continuously, right? Because we're continuously breaking lows. We're breaking structure, making lower highs. Very critical that we're looking at that. Very, very critical. And then on the way down, we identify our supply zone. Our supply zone on the way down. On the way up is where we identify our demand zone. So there are two supply zones that I had already identified on the way down. And as we're heading towards this trend line, we take positions to the downside. We come to the trend line, downside, trend line, downside. Trend line here, downside, yes, but downside here means if you had an entry below VWAP. If you had an entry below VWAP, that's where you would take it. If you didn't get an entry below VWAP, then no entry, right? So somewhere in that area. because the trend line doesn't mean it is a must, right? Because we've already tried it 1, 2, 3 times. The fourth time it failed, right? So by the time usually by the time I'm on the third one, I'm not taking a fourth position. Sometimes I will take it if I feel like there's some geopolitical reason that, or like the pandemic, that could continue to drive the price down. Sometimes I might take a very, very small position, because fourth time, very, very small position. Now the other important thing to look at is oscillators. What do oscillators tell us? Price in the oscillator started to make higher lows where the actual price were making lower lows. These two were going in opposite direction. This is again another reason why at a trend line I better be careful what I do with that trend line. Extremely important to do that. So then price comes to trend line, plays around it. It's not like the previous time where it went up immediately down. It went up, stalled, down. Here it went up there, played a little bit down. It did not break the low of the bar that went there. It stayed above it, and then the very next day it opened strong, never came back down, never filled this gap. So if I remove that Fibonacci for us now, just to give us a clear chart, to look at, we broke the trend line. We never tested this trend line. Very, very strong move to the upside. But what happened? The very day that we broke the trend line, we went to the supply zone and stayed there. 1, 2, 3, 4 days we stayed inside that supply zone. Supply zone doesn't necessarily mean you take an immediate short. It just says, hey, in a reversal, right? Especially when the supply zone happens outside of your trend line, it just says, hey, price could stall here. I'm taking my profits here if I am long, or I'm tightening my stops and see what happens. On Friday, we actually broke out of the zone, not fully out, not convincingly out, because we haven't tested it to see what happens. And also we have another supply zone waiting for us in the 471 to 473 area. So we're very close to that. So we danced around in the supply zone. So the main purpose of today's lesson is, when you come to a supply zone and price is stalling, just watch out. Could go either direction, but don't enter a short position when you have a bullish bias. It depends on where your bias is. When we had the supply zone here on the 29th and we came up to the bottom of that supply zone, we take a short position, no worries. You have a supply zone up here, we never came to that. We have a supply zone here, we came to that, but we never got a signal to go to the downside. We came to the trend line, we never got a signal to go to the downside. So here, this tells me is we have now came out of this pullback. We're back in the bullish business. In that bullish business, the supply zone is now acting as an area of potential reversal, or an area where price stalls. People are taking profits. These supply zones, what are supply zones? Just think about these. I think I said this in the last video. Supply zone is, in a very, very simplistic way of looking at things, we had nice run up. People who kept buying this run up, they're in pain when price goes down. So people bought here, and then when it gave a pullback and then started to rally, people bought again. Like, oh, okay, we either they added to their positions or new people came in. Lots of people are here. And then there are institutions who also are playing to the downside. They know what's coming, they're playing to the downside. They have large orders sitting here. And so now the next time price comes back here, all this pain from here, all the pain from here to here, all this pain all this painful area, as soon as price comes back, they're going to get out of their positions. And this is what happened here. People were getting out of their positions. The institutions did not have a short position here. How do I know? Because they did not drive the price down. If institutions had short positions, price would be going down quickly to close this gap. That did not happen. So I know it's just retailers here getting out of their pain point. This first area of supply, the pain point for this rally entries. Now there's another pain point recovery for those who entered late. Why do they exit their positions? Because they sat through so much pain, they want to just get out, break even. They're not I don't want to use a wrong word. They're not traders who have a real solid plan. They just follow what somebody says. They follow what they hear. They're chasing. Those are fear and greed traders. So as soon as they enter short and they're now, no pain anymore, they get out, right? Because their long position, it was in pain all this time. If they were short, that's fantastic, but their long position is in pain all this time. And then there's other sets of traders that have their long positions in pain, still in pain, but they're like hoping, oh yeah, come on baby, come back and give me back my money. So they will fuel that short-term downward pressure, because it's just a short term, because they were not able to drive the price down. That's how you know it's retailers, it's not institutions. So this is supply zone. We danced in that supply zone and we're starting to break out of it. Sunday evening, when the futures start trading, this is when you'll see, are we gonna come back down or are we gonna come back up? As you do your Sunday evening analysis, you'll be able to check that out. But for now, we have stalled at this supply zone, and let's just get ready to see what happens at the next supply zone, because that's going to be another important part of the trading. And the focus today was to show you, once we break a trend line, we're not playing to the downside, but to the upside we are careful. If you had taken a position at the open 464.53, did you get out Friday at 470? Did you get out when you started to see this sideways movement? Because in options, theta decay is eating at your options, right? Did you get out when you started to see this sideways action? If you were in stocks, did you get out when you start to see this sideways action? Or did you tighten your stops and see what happens next? This is what I wanted to cover. And it plays out the same for all of the index ETFs. Right? It's the same picture. It's pullback, then a recovery, but we're dancing in that recovery. IWM was the weakest. It's been the weakest for a long time. It hasn't had really a strong move to the upside like the SPY and the Qs. It's just been weak, and Friday that weakness just continued. Diamonds and the SPYs are playing really similarly. Some supply zones appear, we're dancing around supply zones. More supply zones coming and waiting for us up here. Alright everyone, I hope this has been helpful for you. Don't forget to always like these videos, because that's what is encouraging me to keep doing them. And I'll see you in the next video.